Welcome, Mr. Khetan. So good to have you on Business Today Television. Ramakrishna Forgings has, of course, been one of the heroes of this particular rally that has taken root on the Lal Street and is in the business of providing die forgings of carbon and alloy steel, micro alloy steel, and of course stainless steel. They make things like crown wheels, ring gears, crankshafts, connecting rods, steering arms, tie rod arms, and of course stub axles. These are all things that you see going into a car near the chassis. Tie rod ends are parts which are fixed on the tire so that they can move right and left depending upon how you move the steering. Welcome, Mr. Khetan, and one of the finest moments to be in India if you are an auto ancillary. Tell us how the business outlook is, and then we'll drill it down.
Good morning, and good morning to the viewer of Business Today. Uh, First, I would like to clarify that what products you have mentioned. We do make all products, but one of more prominent product is front axle beam, where we are quite prominent in India and overseas market. And we are basically in commercial vehicle, not in passenger vehicle. So we do make the product for the commercial vehicles or on all kind of commercial vehicles. Business certainly right now is doing good, and uh, in domestic as well as overseas market both, and it looks quite promising in upcoming time.
Understand from you, you've recently won about 500 odd crore rupees of multiple orders. Could you break it down for us? For which of these segments have you got these orders for? You do operate in the auto and the non-automotive segment. So if you could break it down for us.
Yeah, see, its major order only is from the automotive segment, and like what I said earlier, we were making front axle beam. Now we have moved significantly into the rear axle product. So majority of these orders are from rear axle, and one big order for about 150 crore was from the farm equipment side. So it was from the auto and farm equipment mix of that on these orders.
Okay. Could you also tell us, with this order, what does your order book look like right now? And what is the order book visibility for the rest of the financial year 2024?
See, with these are not, I will say, exactly orders in terms of sale, because these are long-term contracts, and
Okay.
supply depends upon the demand scenario. So it varies, but that's the contract client has entered into us, that my share of business will be that with the client in a normal environment, and right now what they are buying. So and in auto space, this depends entirely on the demand schedule, what kind of order you need to supply, and it vary month to month. And even in case of domestic, it's monthly schedules we get. In terms of exports, we get 2 to 3 month schedules, and we have to produce accordingly.
Okay. Also, if you could tell us the revenues mix right now, auto and non-auto, how is it split right now, and what do you foresee going forward from here?
Yeah, so right now we are at auto 78% and non-auto at 22%. And our endeavor is to take it to 70-30 in next 2 year time.
Okay. And within the auto segment, you've forayed into the EV space as well, sir. So, what is going to be the revenue contribution that you expect in percentage terms going forward from the EV space?
So right now, what we are doing, we are working with our OEMs and working on multiple programs on the EV space, and we have almost 3% of our revenue from the EV, and we expect that it will go up to 6 to 7% in next 2 to 3 year time on the EV side.
Okay. Apart from this, sir, also wanted to you also wanted to ask you on the revenue outlook. You've already guided for about 5,000 crore rupees of revenue going forward from here. Would you be able to meet this target? Are you looking at the bullish trend? Would you also want to revise it going forward? Your take?
Certainly, see, that was a guidance given some time ago. What guidance we are giving right now, a 15 to 20% volume growth. next 3 to 4 years on the CAGR basis. So every year we would like to grow by 15 to 20% on standalone RK flows. And prices may go up and down depending upon the commodity, but volume growth will be there because the market looks quite positive from here, and we find that we will grow both in domestic as well as export markets. And apart from that, what acquisitions and the others we are working on, that revenue will be separate, and consolidated revenue will be much more than that in next 2 to 3 year time. What 5,000 crore I think was for the year FY26 we have targeted earlier. I think console level we will be much more than that.
Much more than that. Could you also quantify for that for us? How much more are you expecting? 5,100, 5,200, or likes of 5,500 or so?
No. So what I am trying to say, if we look at a 15 to 20% volume growth and current commodity prices remains at the same level, we will be around 5,000 on the standalone basis, certainly in FY26. And with the acquisition of Multitech, JMT, all these will also contribute to the top line. Yes. And that will add. And then depends upon how these units pan out in the next 2 years. So certainly we have an aggressive target with these units, and we would like to do a much better number. I cannot give you a definite number what we will achieve, but certainly it will be much better than what we have said on the 5,000.
You talked about JMT, sir, and I was about to come to that. You've recently got the approvals from the NCLT and you've agreed to offer about 125 odd crore rupees to JMT Auto. I want to understand the timelines of the acquisition. By when do you see the overall contribution coming in from this asset in terms of top line? What is the incremental revenue contribution that you are expecting, and from when? First you answer this, and then I'll ask you about the debt also.
Yeah, so FY23-24, we are not looking for any revenue from this acquisition, because we need to take over the unit and do the improvement in the plant and machinery. And there may be some low-hanging fruit, we will catch on that, but I am not counting on that. So for the first year of revenue will be FY25. And we are looking to have a 200 to 250 crore top line from this unit alone in FY25. And then we will go further at least 40-50% per annum for next 2 years in this unit.
Okay. Would you be taking any financial liabilities from JMT Auto, and what would that do to your overall debt levels currently?
No, there will be no financial liability because it's from the NCLT process, so it's a clean company in terms of liability.
Okay. What is the current debt on your books, sir, and what is the plan to reduce? You have been on a declining trend when it comes to debt reduction plans of yours. Could you tell us what is the situation right now and the track going forward?
If you look at my FY23 numbers, my net debt was around 1,100 crore. But certainly we are making a lot of investment in this year. Like we have acquired Multitech, we have to invest in JMT, even we have to work on the Ramkrishna Titagarh Railways company, where we have to invest our share of equity. Apart from that, there is a lot of investment plan in terms of capex on a standalone basis in Ramkrishna Forgings. So all this together will certainly take care of my this year's free cash flow. And debt level may remain at this level, at FY23 level, or maybe little elevated, maybe by 100-150 crore on the net debt side. But certainly from FY25, it will again start going down. And you can see that whatever we are spending, we will be we are earning from overall all the verticals. Spending will be not on that level, and we will be able to reduce 200-300 crore of debt every year.
Okay. Sir, lastly, if you could help us understand, the margin outlook that you have for your company, the current input costs and that are aiding the margin, and what is the outlook on that one, and the volume guidance for FY24.
Yeah, certainly I will come to volume guidances, which I have already said we will grow by at least 15 to 20% in terms of volume growth.
Yeah.
Coming to margin, we are certainly 22 plus on the EBITDA side, and we endeavor is to improve on that, and we will try to improve on margins a little bit, because input or commodity is a pass-through for us with our customers. So we are not worried about that. Certainly we have to look at other costs like energy cost, manpower cost, and maybe other inflationary cost, which is impacting all the areas. But overall, we are bringing in efficiencies by way of automation, way of making value add in the product line, and all these will help us to maintain my margin or whether improve this margin.
Okay, wonderful. Well, many thanks then, sir, for taking the time out and discussing the insights from your company, the business outlook going forward. The stock has done very, very well, still up about 1% at 720. It's been a clear multi-bagger in the last 3 years or so. We've seen the stock move up from below 50 rupees to 720 odd levels right now, and constant orders are helping you do that as well. And we will continue to revisit and understand from you how the exports and the domestic business going forward as well in Q2. Let's get back onto the discussion after your Q2 results too. Many thanks for being with us on Business Today TV, sir.
Thanks a lot.
If you like the video, do like, comment, share and subscribe.